idea of this webcast is really to focus on understanding the various aspects of cash versus accrual accounting. And if we could go to that slide there, the next slide, please. As I set out some learning objectives for today, what I'm really looking at is helping to understand the cash basis, and I'll use basis and method interchangeably because they really are meaning the same thing. But the cash basis, then we're going to look at the accrual basis of accounting and how to move between the two. They have different purposes, but one doesn't exclude the other. So what we'll do is I'll show you how to understand when a transaction would look like, what a transaction would look like in a cash basis, and then the same kind of transaction in the accrual basis. And then we'll also look at what is right for your situation. I'll talk briefly about some of the aspects of the different types of uses where you'll find cash and accrual accounting and how you might use them yourself. And then I'll use a brief demonstration of a cash flow forecasting model, because ultimately the idea is that when we get down to the sources and uses of funds, that really is the tool that we can use to understand how cash and accrual accounting are tied together. So we'll review these again at the end of the session today. Ashish, could we go to the next slide, please? A bit more of a background on myself. My background over the last 30 years, I started my career in Canada as an economist and then an accountant. And I realized very early on that there was a real need for people to have a practical and useful understanding of cash flow management. I wasn't as concerned in the accounting world about understanding a financial statement as a point in time or as that, as a P&L over a period of time. I really wanted my clients to understand how to use these as accurate and effective tools in running their business. I felt very often that we, as accountants, produced once a year a financial statement and hoped our clients did something with it, and many times they didn't know what to do with it. So what I did was I really started to focus on cash flow management, and that was a way for me to really see value in the work that I was doing and how to make these cash flow, the financial statements, an effective tool for running a business, because they gave you a point in time, a starting point, a check-in, and ultimately cash flow management allowed me to do that. So I started working with companies from turnaround situations, companies I was involved with. I owned a few companies, and I obviously own Barnard Howard now. And the idea was always to look at how we could turn these businesses around or ratchet them up, get them really going again. And quite often I found that it wasn't that they didn't have great ideas. Most of my clients had wonderful ideas, but they didn't understand how to use their financial statements as a vehicle to really understand where their business was at. So that's what I hope you'll see today, is that sort of a flavor of that, in the sense that I really want you to understand that cash and accrual methods are both effective tools for running your business, and they're not really very complex. I think we make a lot of it in accounting because it can get complex, as you can imagine, but I'm going to show you a very practical way of looking at cash and accrual accounting. Over the time I've talked here about developing cash flow models, what I strongly feel is it's important to understand that the use of cash flow models in running a business is a great tool, but you need the financial statements to back it up. So what I wanted to do was to make sure that, from whether it was a tax basis and using cash, or whether it was a presentation to a banker, that the business owner really understood their business. So these myriad of cash flow models I was creating over the years started to really form some methods in my mind about how to present this to my clients, and that's what I want to share with you today. As Ashish said at the introduction, I've worked both domestic and internationally. It doesn't really matter what currency you're in, even what jurisdiction. Many of the aspects of accounting that we use in the United States are generally accepted around the world. And by doing so and understanding it, you can take these ideas to many different places, and we'll talk more about that. I say here cash or accrual, it's real. What I'm getting at there is, as I've mentioned many times, is the cash is the way the business is structured today. And then the accrual method really gives you an aspect of looking at the business in terms of where it could be going. So what I want to do is really help you to understand that cash is where the business is at a point in time, and the accrual method really helps you to understand what could be and what really is happening in your business operations. So we'll talk more about that. If we could go to the next slide, please, Ashish. Cash and accrual methods. It doesn't matter what kind of business you're in, whether or a nonprofit. It doesn't really matter what you're using to run your business. It's really a product of understanding the application and the point in time that you're trying to present your information. Most businesses report their tax returns in the U.S., small businesses, on the cash basis. And the reason they do is because that is a very effective means. The government decided a long time ago, is an effective means of understanding where the business was at, and I'll explain this a bit more down the road. But you don't have to accelerate revenue, and you get to record all your expenses as paid. So that for tax purposes, we often will see that the cash basis is used. For bank presentations, you'll often want to use the accrual method. Bankers understand this. You're not doing anything they don't understand. They'll look at your financial statements and they'll see them in terms of a cash basis. And that means that the way the presentation of the financials are in that picture is the way the business is. Then the presentation for the future and where you are at a point in time as you transition to that future, the accrual method makes a lot of sense. And I'll talk about this because I'll give you an example, but let's look at just thinking for a second about revenue. In the cash basis, I'm going to show you that revenue is the dollars that have come into your bank account. That's the basic way of looking at it. On the accrual basis, revenue is recorded as the transaction that I have made a sale, and I've completed the sale, but I might have a receivable, and that receivable pushes out into the future. The accrual basis allows me to bring that in, where the cash basis doesn't. So when you're doing a bank presentation, you may want to show at the end of the year that your revenue for the year was $1 million, but in fact, you have another $100,000, let's say, of receivables. So you want to bring that into the revenue, and it gives a stronger picture of where the business is at from a go-forward strategy. And you'll see more of that. I also mentioned briefly here that the application of these methods, whether you're doing a bank presentation, running a business, working in a nonprofit, starting a business, or in your family situations and in student situations, these numbers all make sense. And so what we'll do is we're going to look at techniques that you can use to understand day-to-day financial operations that we all experience. Let's go.